Meir Statman is one of the world's best-known experts on behavioural finance. A professor of finance at Santa Clara University, he's written a book called Finance for Normal People. His central argument is that there's been too much focus in the past on the irrational nature of investor behaviour. Most people, he says, are far more rational when it comes to investing than is commonly thought, and have perfectly normal wants and needs.
We want things that are very simple. We want to be rich, we don't want to be poor, we want to take care of our kids, we want to acquire high status. Some of us want to be true to their values. We want to play games in the market, for example. And once you look at what people want, you can distinguish what is a want and what is an error. And then you can help people do better, satisfying their wants without falling into the pitfalls of errors.
So, what can ordinary investors learn from Meir Statman's book? How can they avoid making potentially costly mistakes?
Well, the lessons are figure out what it is that you want. So, for example, is status important to you? And is your way of getting status by buying alternative investments, hedge funds, okay? Hedge funds are lovely because they're available only to the rich. And so you can just say, I'm into hedge funds, and we know that you are rich without you bragging about it, which is really very, very nice. But the returns of hedge funds to investors, not to their managers, are lousy. And so ask yourself, is it worth for me to pay these kinds of fees for feeling that I'm a member of a special club? Alternatively, you can fly first class, you can donate money to charity. There are many ways to increase your status. Figure out what is a good way, an economical way for you to do that.
Meir Statman is a big fan of indexing. Active investing, he says, is a game you'll probably lose. So the vast majority of investors should simply take the market return instead.
In the stock market is like playing tennis against possibly Djokovic on the other side. It is not like playing tennis against a training wall. And so you always have to ask yourself, what is the advantage that I have over Djokovic? Do I have an extra size racket? What do I have? And for most people, the answer is nothing. And so why play that game when you can just sit yourself on the sideline and get the average return? Remember, for everyone who gets above average return, there is going to be someone below average return. So mediocre is beautiful relative to getting below average returns.
So work out what it is you want from investing as opposed to what you need. And if it's excitement or prestige that you're looking for, you should probably look elsewhere.